What's going on, you guys? So I thought it would be a cool idea to every single month track the 5 stocks I picked for my top stocks for 2018. So I went ahead and made a dummy portfolio here with $50,000 invested in these stocks, and I figured it would be a cool way to kind of track the performance of these stocks and see how this portfolio does. Now, this is not a real portfolio. I just used $10,000 roughly in each investment, and I figured we would start by looking at the performance of this portfolio. So I uploaded this video about 1 month ago, and the return so far from this portfolio has been 6.25%, and it would be a hell of a lot better if it weren't for GE. Now, GE is one of my biggest investments, and we got some disappointing news from that stock, and we'll talk about that more in what the major announcements are going on with these companies, and we're also going to look at when the earnings dates are for these, because we're expecting to see big moves surrounding the release of the earnings reports. Now, before I get into the video, I just want to remind you guys that I do have a free stock market course called How to Find a Great Investment, completely free. You guys can join this right now for free. I have 6 lectures in there right now. I'll show you guys what those are. We have Before You Invest $1, What You Should Invest in First, Index Funds and ETFs, Buying Individual Stocks, Investing in What is Familiar and Simple, and The Best Stocks for Beginners. The link for that, guys, is right in the description below, or we'll have a pinned comment. And then these are all the different topics we're going to cover in this free course. So if you guys want to learn more about investing, that course is waiting for you. So first of all, let's take a look at this portfolio here. And as you can see, Chesapeake hasn't really moved too much. They're up about 2.86% from when I made that video. Boeing is the big winner here. They're up 14.48% over about 1 month of time, which is absolutely insane. Amazon is up 10%, 10.2%, and Applied Materials is starting to move too. They're up 10.62%. Now, as we can see there, GE is dragging down this portfolio. They're down 6.93% from when I made that selection in that video. And we'll go ahead and talk about GE first, since they are the loser of the list right now. Now, again, any of these articles that are mentioned in the video are linked in the description below if you guys want to read more about them. But this was a good one here that gives us a good idea of what's going on with GE. It says this was GE's worst week since the Great Recession back in 2008. So not a great week for GE shareholders. Very disappointing news came out, and I'm going to share with you guys some more details about that. So the main issue GE is having right now comes down to pension liabilities. So this is actually an issue a lot of big companies are having, and it has to do with low interest rates, because what they would do traditionally is they would take their pension fund and put it into low risk bonds, but because interest rates are so low right now, bonds are not returning much of anything at all, and they're not able to build that pension fund up in a healthy way that is going to have them avoid risk. Obviously, you wouldn't take a pension fund and invest it in anything risky, because you need to have that money there for your employees and people receiving those benefits. And because interest rates are so low, they're not able to make much of anything as far as a return goes on these bonds. So GE was hit with a $6.2 billion deficit currently in their pension liabilities, and that's not even the whole thing. So basically, they had to get a loan for that, a $6.2 billion loan, in order to pay their current pension liabilities, which well exceed that $6.2 billion as far as their deficit goes. So the total dollar amount of this pension problem sits around $31 billion. They have about $31 billion in pension liabilities that are not currently paid for, or they don't have the money. Now, they don't have to pay these right now. This is going to be paid out over time, but this is the current deficit they are sitting on with these liabilities. So in order to try to come up with a solution to this problem, GE has sold off much of the GE Capital business. They announced they're going to be getting rid of $20 billion in additional assets, including the railroad business and the iconic light bulb division of GE. There's also talk of possibly splitting up the conglomerate and breaking it off into separate businesses. Now, a lot of people say, is that really a good move for GE, or should GE remain together? And the whole idea of GE, from what I've learned by, studying this company and listening to interviews, is that GE is a collective research group, and there is value in them remaining together as they're able to share research with different areas of the business. So a lot of people would not agree with the decision to break GE up into different companies or businesses, but nobody has said that's going to be what happens just yet. But they do have a big problem here with their pension deficit, and it's a huge problem on the balance sheet, and as a result, that has been reflected in the share price, and they are falling even lower at this point. So obviously GE is in a big financial mess right now. This is something that just came out. It was very disappointing news for GE. And as far as me, like I said, guys, my investment in GE is probably a 5+ year investment. They are still paying a dividend, so in the meantime, I'll collect those dividend payments and reinvest it back into shares of GE. But this is something I see as a 5-year investment here as far as GE being able to turn around. But this news was obviously disheartening. A lot of people are thinking about selling GE, and this would be probably the worst time to sell GE right now because they are on a major sale. I mean, if you guys are looking to pick up a good blue chip value investment here, GE may be a good opportunity, but just be aware that they are in a serious debt crisis right now with their pension liabilities. And this really was disappointing news, guys. GE was actually doing pretty well at the beginning of 2018 here. They were in the mid-17s in December, and they climbed as high as almost 19, or they broke $19 a share on January 11th. So I was seeing that. I was happy to see people buying back into GE, but then obviously this news came out and it sent the shares falling even lower. And as of this, we're January 19th of the close, they were at $16.26 a share, and odds are they're going to find a bottom probably somewhere between 15 and 16 a share around there. But not great news for GE. But since they were the loser, now we can talk about the other stocks that are doing better than GE has been, and so we'll talk about Chesapeake next. So as we said, Chesapeake is up just about 3% since we added them to this list, and the main reason for that, guys, is just because we are seeing a rally in oil prices. Here I have the 1-year chart, and as you can see, we are at a high here over the last year. Oil prices are higher than they have been since about 2015, so stronger oil prices are helping out with Chesapeake, and more people are investing in this company. Other than that, there's no major news coming out about Chesapeake right now. We're seeing oil prices hopefully recover, and that should help Chesapeake as far as what's going on with them. If you guys want more information about why I see Chesapeake as a speculative investment, I will link up my original video about these stocks at the end of this one. And then we have Applied Materials. Applied Materials is doing great. They're up over 10% since they were added to my list here. And as you can see, it says Applied Materials and Lam Research boosted by upgrades, and ASML breaks out. So the Susquehanna Financial Group analyst upgraded shares of Applied Materials and Lam Research to positive from neutral, and that gave the share price a boost. And we are also seeing that ASML Holdings blasted higher on a bullish report published Monday. Anytime you're seeing a peer perform well, you're generally going to see a lift in the other competitive companies out there. We see the same thing happen typically with NVIDIA and AMD. So this analyst says that Applied Materials and Lam Research are both going to benefit from continued strength in the memory chip market and a stable spending through 2020. So this is great news for Applied Materials. There's going to be more people out there producing semiconductors, and they're going to have to be buying the equipment. And Applied Materials is one of the biggest companies out there applying equipment for semiconductor manufacturing. So this is great news here for Applied Materials. Now, I don't always pay attention to analyst recommendations. I make my own decisions, but it's always good to see an analyst upgrade a stock. You're going to see a nice boost in the share price typically when that happens, so that is why it was worth mentioning here. And then as we said here, guys, Boeing was the top performer on this list so far. They're up 14.48%. They are just doing absolutely phenomenal. There was no real news out about Boeing as far as anything that would cause this, other than just a lot of people investing in the best performing stock of the Dow Jones Industrial Average. A lot of people are diving into Boeing stock, and it seems like they have nowhere to go but up right now. But do understand that when you're seeing a stock climb this much in the short term, you should always be weary of whether or not that stock is becoming overvalued. But as of right now, it seems like they are still trading at a pretty healthy level, and honestly, the best thing that I think we could see right now with Boeing is a bit of a retraction with the share price, just so we can form a healthy price base at that point. But nothing really new came out about Boeing over the last month as far as major company news goes. And at the end, guys, I'm going to tell you when all the earnings reports are for these companies as well. And then lastly, we have Amazon. They have been on a tear as well. They're up over 10% since we added them to this list. And a major reason for that lately is because they are hiking the price of the monthly Prime membership. This is just going to mean more subscription revenue for Amazon. Like I've said before, guys, I love these subscription-based businesses like Netflix or like Adobe has also moved into. It's just consistent revenue every single month. And now Amazon has justified a price increase on this monthly membership. Now, they're not going to increase the annual membership. That's going to stay the same, but they are going to be increasing the monthly membership for an Amazon Prime membership from $10.99 a month to $12.99 per month, which is an 18% increase. However, as we said there, the annual membership fee of $99 will not change. So as a result, we saw the share price increase significantly from this news because it means more money for Amazon. I've talked about Amazon stock a lot, guys. They are one of my favorite investments. They're one of my biggest investments. And the reason I like this subscription-based model for Amazon is it creates very loyal customers, because the more you use your Amazon Prime membership, the more you're saving on shipping. So it encourages people to become exclusive to Amazon. I know in my own family, we order just about everything we can off Amazon just because it's convenient, we save money, and we feel like we're getting more bang for our buck by using that membership. Now it says here that the Amazon Prime members are some of their most loyal customers, which makes a lot of sense. They're also the most frequent spenders, and they account for roughly $2.5 billion in revenue for Amazon according to its third quarter financial statements. So Amazon Prime is huge for Amazon, and seeing them increasing the cost of the monthly subscription is great news for them as far as, generating more revenue. Anyways, guys, that was just a quick update on these 5 stocks. I'm going to be updating you every single month around this time. And so here we have the earnings dates for these companies. GE is coming up shortly on 1/24/2018. I'm not expecting to see anything good there. In fact, I'm expecting to see the share price fall even further on that date. So if you are someone who's thinking about getting into GE, I would wait until after the earnings report. Then we have Boeing reporting earnings on January 31st, Amazon on February 1st, Applied Materials on February 21st, and Chesapeake on February 22nd. And so by the time we're doing this video next month, all of these companies will have reported earnings, and we will have a lot more to talk about. So that's all I got for this video, guys. Like I said, I have that free course on how to invest, how to find a great investment waiting for you if you guys want to find more content. And the link for that is in the description below. But I thank you guys for watching this video, and I hope you have a great rest of your day. If you are interested in learning more about investing in the stock market, I've created a free course just for you. The link is in the description below. Here are a few other videos you might enjoy as well.